here today with David Hale, Chicago economist and the co-editor, along with his wife Lyric Hughes Hale, of the new book, What's Next, by Yale University Press. David, thanks for joining us today.
Glad to be here.
I looked through your book and there are a tremendous number of topics and interesting writers.
Yeah.
Let's talk about gold. That's the chapter that you wrote.
I wrote two chapters, one on the U.S. economy and the outlook for the business cycle this year. And I wrote a second chapter on gold because I think gold has become a very interesting topic. And my basic thesis is that gold is now in a systemic, sustained bull market rally because of what will be strong central bank demand from emerging market countries. And the country I focus on in particular is China. China only has about 1,050 tons of gold in its reserves, a very tiny number, about $30 billion, with $3 trillion of foreign exchange reserves. So I think the odds are very high that over the next 4 or 5 years, China may acquire several thousand tons of more gold as part of its need to diversify its reserves, and also as part of projecting power for the RMB, which it's now promoting as a global currency for trade. Not yet as a reserve currency, but as a global currency for trade. One little known fact about the United States and the rise of the dollar as a great currency 100 years ago is that on the eve of the First World War, the U.S. had more gold than England, France, Germany, Russia, than Europe in general. So I think this made the dollar very well positioned after 1914, when the pound had all the problems that came with Britain's role in the First World War, to emerge as a rival reserve currency in the 1920s. Now China sees the dollar in trouble. It sees America having many financial problems, like Britain had back in 1914. So China may have fantasies about the RMB emerging over 10 years as not just a trade currency, but possibly even a reserve currency. And having large gold holdings would be a way to project that kind of power, that kind of image.
Now, is it a good thing to be a reserve currency? I think you're from the Midwestern United States. I think there are a lot of import competing industries that might not like it.
Yeah. That's been a source of great controversy over the last 30 years. We coined the term the Rust Belt back in the 1980s to describe what was going on when we had a super strong dollar. So needless to say, this is a source of great controversy. But I'd say on the balance, there's a perception that America has been a beneficiary of having a strong global currency playing a reserve currency role. This has given us tremendous flexibility in the conduct of our fiscal policy over the last 30 years. We could not have financed the Reagan budget deficits in the 1980s, or certainly the recent deficits here in the Obama years, if the dollar did not have this global currency role. We would have had to deal, I think, far more quickly with the whole issue of deficit financing and all the possible challenges that poses for our financial system.
Let's say the RMB becomes a reserve currency. It doesn't mean that the dollar isn't one any longer. You can have multiple reserve currencies.
That's correct.
And yet the ability to substitute between different stores of value probably introduces a little more discipline into the system.
Well, the European currency already accounts for about 26% of global reserves. The yen has shrunk to a very small share, just 2 or 3%. But there's no doubt the euro is now a rival to the dollar. And its share could easily increase over time. And indeed, one of the things that's very interesting about the reserve data here for the last 6 months is there was, since October, with the Fed's QE2 policy, a big decline in demand for dollars on the part of emerging market central banks. They were buying in the first half of last year at annual rates of $50 and $60 billion. But by the end of last year, the early months of this year, they were down to only buying a few $billion each month in the dollar. So already we can see the euro here as a near-term rival because of uncertainty about U.S. fiscal policy and uncertainty about U.S. monetary policy, and the perception that the QE policy is a devaluation policy.